Money Sense, bringing an informed financial perspective to the Cayman community.
A very good morning and warm welcome to Money Sense. Hosting with me, Simon Caudry. This morning is Christophe Barnett.
Good morning, Simon.
Good morning, Christophe. We are delighted to be joined for the show this morning by two people, Alice Ramos of Saxon Insurance and Rich Ellison of One Tradex. Today's show is about investment clubs, and more specifically about a long-running program for students right here in Cayman, which helps them to understand the investment industry and portfolio construction by running a student investment club competition. Thank you very much, both of you, Alice and Rich, for joining us this morning.
Oh, thank you.
Thank you for having us.
So, an investment club. Let's sort of start at the real basics. What is an investment club, just for those of us who may not be familiar with that concept?
So it's an interactive program geared towards high school and college students in the Cayman Islands. So basically, we give them fake money and we allow them...
Fake money?
Yes.
In today's world.
We refer to it as virtual currency.
Yes. And they trade on a virtual stock market for 6 months and learn the ins and outs about investing, taking risk, and working as a team.
Okay, so they do this for... So how long does the program run then?
It's for 6 months.
Okay. And why do the kids want to get involved with it? It's fake money. I mean, if I were a kid, I could understand wanting to get involved with real money. What's in it for the children, or the students, rather, I should say?
Well, hopefully they want to learn something about, the investment world. But I'm pretty sure it has to do with the monthly prizes and the grand prize at the end, where we award the winning team with $2,500 US, the second place team with $1,000 US, and then the third place team with $300 US.
And when you go then to, let's start with the very basics. How many students are entering? How many teams? What's the format of the competition this year? Because it's just started, is that right?
Right. This year we have a ton of teams. We have over 160 students who are participating from several teams. I actually think this is probably the most students we've had in a long time. So we have students participating from Clifton Hunter, John Gray, St. Ignatius, Cayman Prep, Hope Academy, and the Cayman Brac High School.
Goodness gracious. Well, that's 160 students. And so there's a bit of inter-school rivalry, I suppose, that's going on.
So I guess so. Some good competition.
How many teams is that across? Or one team per school, or they can have multiple teams?
No, it's multiple teams, and I believe it's just over 40 teams.
Wow.
We've got 40 active, and I know a couple of the other schools are still organizing. In early days, we'll have more people coming in. So we have 70 spaces available, and we're 42 or 43 active.
And so,
now.
5 or 6 people per team or something like that?
No, so it starts from 2 people per team, and then it can go up to 5 people.
Gosh, okay. And
just to interrupt, as well as the sort of grand prizes at the end, we have monthly prizes, which is based on the performance in the preceding month on a percentage basis. The final prize is based on portfolio value, but the monthly prizes are good because even if during the first 5 months, you haven't done as well, you could have a really good month at the end, turn in, say, 12 or 15%, and you still could win $100 for your team, which is not bad.
Absolutely. What do the kids do with this money? Is it theirs, or does it go to the schools?
It's their money.
It's their money.
Yeah.
Well, I think we should enter, Christophe, and see what we can do here.
I don't know if we can pass as the students anymore, but
that's a fair point. So, when you look at this competition, then it's been going for 8 years?
9 years.
9 years now.
Yeah, 9th year.
And you've been involved, Saxon Insurance has been involved the whole time.
Yes.
So why is Saxon Insurance involved in this? What's the motivation for your business?
It's mostly Saxon Pensions. So the reason that this came about was during the the financial crisis in 2008, 2009, where we noticed that a lot of members were concerned about their pensions and how it was falling, and they didn't really understand how their pensions was how the markets can be affected by current events happening, right? Or how their investments can be affected by the stock market. So we then decided, okay, well, who can we target? Who can we teach about what's happening in the investment world? And then we decided to target high school students. And then in turn, hopefully they can either pursue a career in that in finance or investing, or and also they'll be able to teach their parents about investments and the importance of money and how it's all related.
Assuming their portfolios go up, I suppose that's the...
Yes.
And what about yourself, Rich, for One TradeX? You've not been around as a business for 9 years, so you've been involved with this competition for how long?
We got involved for the first time last year. Saxon approached us about partnering with it, and we're very excited to do that. So it's the Saxon Investment Challenge. We refer to it as being powered by One TradeX because the students are using our investment platform. So they get a real-world platform using virtual currency, and the data is actually coming out of the market. So it reacts to, some people may have been long or short Tesla yesterday, let's say, and Tesla reported disappointing earnings, and they went down after hours, and we'll see how they open up today. I use that as an example because one of the schools we went into, there's actually a team there that was saying, how can we short Tesla when they first came in?
So how old are these kids?
13 to 19.
I didn't know what shorting meant when I was 13 or 19.
So what kind of training goes in, or is it all just on the kids to do their
own
research?
It's up to the students and the advisors. So it's pretty much self-taught. They're One TradeX does give advice, but it's mostly up to them to do their research and then select their trades.
But in the schools, most of them are attached to a business or economics program, and they do some work with their advisors. And it's sort of a walk before you run step. Most of them start with, basically long strategies on stocks. By the end of the program last year, and we only have the 1 year at One TradeX of it, people had branched off into options. There's one team that was doing futures, and, there are quite a few teams that were shorting. So, the kids are pretty bright and engaged, and it's really interesting because not all the teams, but some people really get into it, find they have a natural interest, and with the resources they have in their advisors at the school, by contacting us or people at Saxon, and also just going out and reading things from the internet or at the library in their school, they can pick up a lot. And the nice thing is they get to try stuff in a pretty safe environment. They're given $100,000 of virtual currency to start with. And let's face it, you can be a little braver with virtual currency than you might be with your own pension portfolio.
Taking a slight segue, you said something there about a virtual portfolio. Is this something that people who are listening to this show will say, hey, that's not a bad idea for me to try to get my feet wet in this industry just to understand what goes on in the market? I don't, there's all these people who have so much information. They have their Bloomberg terminals. They watch their CNBC. I don't really have all that data. Can I go and play with a virtual portfolio just to get my hands or my head around what these securities are? Is that something that a regular person can do?
Sure. There's lots of things where you can do that through the internet, or you can actually contact One TradeX to find more about it, because a lot of our people who are first investing who eventually become clients start off with demonstration accounts, which we provide for free, and people will get their feet wet and try various things. And there's two things. There's investment ideas, and then there's also the mechanics of using a online discount platform. If you're not used to doing something for yourself through the internet, let's say you have a good idea, but you just enter the order backwards, which is easy enough to do if it's your first time. That could be disastrous if you're doing it with real money. If you do it with a demonstration account or virtual currency, it's just a learning experience.
Euphemistically called a trade error, I think. That's the
fat finger.
Yes. Is there a cost for the students to get involved?
No, there's no cost. It's free.
Except for their time, I suppose, and their faculty advisors' time.
Right. The advisors are awesome because they volunteer their time. I'm not sure how this program would survive without the volunteers. So that's something else. We also introduced, I believe a year or two ago, we actually have a prize for the winning school, and the teacher who volunteers, they win a $500 travel voucher for volunteering their services.
Very nice. A nice weekend away in Little Cayman or something.
Yeah.
Excellent. What advice do you give these students or what advice should they be given? Two questions, I suppose, when they start this. They don't know anything about the investment industry, so how do they get to know something about it? What's that process?
Well, I mean, like I mentioned, it's pretty self-taught, and then we give them certain tools, like, we send them to Yahoo Finance. We encourage them to watch the news and just read up on what's happening, for instance, with the kids, I should say students, like what's the in thing, is a new iPhone coming out, is Netflix doing something? So we try to give them examples of things that are relevant to their age group, and then, suggest to look into those different different
And
stocks.
are there tools they can get through OneTradeX which help them in that research endeavor?
Well, they have access to, a demonstration version of the full platform, so they can get news feeds and market data and things. And when we speak to them, what we're really trying to encourage is them to develop financial acumen and a bit of securities analysis. So, the trading is a tool to put their idea and their research into play. So we recommend that they start with a handful of names that they're interested in, whether it's companies they know or a sector. They might want to be a doctor when they grow up, so maybe they're looking at biotech or pharmaceuticals or something. So it's a bit interesting when they're doing the analysis, but to start looking at companies. And by the end of it, you do have teams where people are looking at filings and, analyst reports and trying to figure out, and then they're putting that into play with what they pick. What we don't want is people just sort of trading at random and trying to make it through luck, because we know that, luck isn't really a strategy.
There's a famous general, wasn't there? Said rather be lucky than skillful, but I think your point well made. What does a typical portfolio look like for these kids when, in your experience, when you're doing it? Are they buying one or two stocks, or are they doing traditional? We'll come on, Christoph can talk a little bit about this, but are they doing traditional portfolio management approaches?
One of the things is they are trying to win, and these would be riskier portfolios than you would generally recommend or see for somebody. They tend to be concentrated portfolios. They tend to be names of companies you'd see the Amazons, Tesla, Facebook showing up, the names that are out there. You also see some people bolting on and getting some diversification through ETFs, but most people will have 20 or fewer positions in their portfolio, and a lot of them are 5 to 10 just because they're getting into it. It is a relatively short period of time. They also have all their other studies. So they're not going and doing, a traditional asset allocation, and we don't see much fixed income coming in. Really bonds, which they could be buying through our platform, are kind of outside the scope of this. It's very much stock related, except for the odd team that was, doing oil futures last year.
We'll come to futures and such like. Christoph, come on, give us the Oracle's view on what they could or should be thinking about.
Well, we've talked about a lot of things in terms of the parameters there. One thing we mentioned is long. So long means to buy or to own a stock. So you're hoping that the price goes up and so you can profit. Short means that it's a bet against a stock price normally, or any asset. So you'll profit when the price goes down, and you can use that to hedge your portfolios. Not everything goes up. We also talked about options and futures, which are derivatives, another big word, which just means that they derive their value from the underlying asset, and they can be used to make bets and for the price to move up or down. Rich, you mentioned having a concentrated portfolio. That just means you have less than, let's say, 10. You're focused on a few number of stocks and hoping that they will drive your gains. And then you also just mentioned ETFs, which we talked about on the podcast and radio show before. Exchange traded funds, which is essentially a stock that you can buy that's a basket of stocks. It might be a technology basket, or just a country basket, or just the entire world portfolio in one stock.
Look, we're going to take a short break. After the break, we're going to be rejoined by Alice Ramos and Rich Ellison and talking about the subject of investment clubs. And we'll talk specifically, I think, straight after the break, just as to some of the research ideas that the students should be thinking of when they build their portfolio. So join us again in 60 seconds.
This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands and sponsored by OneTradeX.
And now, more Money Sense.
Welcome back. In the second half of today's show, we are going to continue our conversation on investment clubs with Alice Ramos and Rich Ellison. And I should say right at the beginning of this second half of the show, having just listened to our advertising, we should put a little disclosure in. Obviously, we are joined by Saxon Insurance and we are joined by OneTradeX, and thank you both. OneTradeX is, of course, a sponsor of the show. So a double thank you, Rich, for being a sponsor of the show and supporting Radio Cayman as well. Just before we went to a break, we talked about some of the approaches the students, we must use the word students, use when they make their investment decision. Christoph and Rich, perhaps you could sort of give your perspective on some of the approaches you think they should be adopting when they do their research and make their investment decisions.
Well, just before we get started on that, are there any restrictions on what they're allowed to buy, or how big they can go in their position size?
Well, I mean, they've got the $100,000 value that they start with. The system, just like for our regular clients, offers regulation T margin. So they can go 4-to-1 intraday and 2-to-1 overnight. So they can, lever
So
up.
within the day, they could buy as much as $400,000 worth on that $100,000 account.
Correct. And if they were, it's maybe a bit beyond the scope of this, if they were to use derivatives, obviously you can lever that up more. So they have access to the full gamut. We have 24 countries and 110 different markets that they could be accessing. We try and put the restriction on and tell them that we'd rather people weren't betting on over-the-counter and penny stocks. We'd prefer if people were doing research on real companies and regular names. Not that everything that's traded over-the-counter isn't a real company, but that's a bit of the Wild West. The disclosure and regulation there is, significantly weaker than on exchange-traded products.
And Alice, what type of, in your experience when you've seen the teams and the top performing teams, what approaches have you seen them take in terms of their investment styles?
Like Rich mentioned earlier, they are pretty, they're risk takers. And they also like to invest in what they know, right? I can only speak about, well, maybe I'll use an example. So we had a team, who participated for the first time. They didn't do so well. They were less than 10th place. But then the following year they came back. I think they were a little bit more confident, and they invested in, like Netflix and different pharmaceutical companies. And they came back as the winners with triple the returns from when they first started.
Okay, that's interesting that they can do it multiple years in a row. And then
Yeah. There's no limit. Well, I mean, once you're under age 19.
Oh, Simon, you sign up next year. So in terms of putting a portfolio together, I guess on the competition side, as Rich mentioned, and Alice as well, these are risk-on portfolios because sort of it's not real money. You don't have to worry about losing your investment necessarily. It's just the competition. But sort of in more real life, once you move on to real money, that's something that absolutely must be considered the risk.
Right.
And how much of your portfolio can you afford to lose? And then that kind of leads you into looking at different asset classes. We're talking mainly about stocks in this investment because those give the highest returns, but they're also the highest risk. So what can you do? Well, you can not just buy one investment. Rich mentioned Tesla. Well, if that's your whole portfolio and it takes a dive overnight, that won't go so well. So hold multiple stocks in your portfolio. Rich, next tip.
Well, I think I think we're going to see over time, especially as we have teams that have done it 2 or 3 years, there will be a little more diversification. And also, we talk about home market bias. Cayman Islands Stock Exchange, we're not really trading on there because there's a limited number of stocks, but our home market bias comes from seeing things out of the U.S., and granted, that is the largest market, but 70% of the world is not on the U.S. exchanges. And if you look at relative returns at this point over the past year, the rest of the world has actually been outperforming the U.S. on a currency-adjusted basis. And it's one of those things to take and look beyond just seeing Google and Amazon and Netflix and things that are traded on U.S. exchanges. We had a team, that contacted us the other day because they wanted to know where to buy Louis Vuitton. So they're trading that through Frankfurt now.
What are students doing buying Louis Vuitton clothes? That's a whole different conversation we need to get into.
Well, they're buying the stock with fake money, so there you go. Not the products, or maybe they are.
I just want to go back to a practicality. How realistic is this from a trading perspective? In other words, do the students incur trading commission costs, fake trading commission costs, in other words? But is it as real as a real portfolio could be, other than it's just virtual money? Sure,
they're incurring the cost you'd expect on a discount trading platform. So they're paying less than $10 an equity trade if they're trading 500-600 shares, whatever the lot is, which they can do with their money. So the trading costs on their returns are, sort of de minimis, given if they're doing, a concentrated portfolio. If somebody tried to buy 50 positions, then as a percentage, the trading costs would be higher because that would be $2,000 in each name if you just did the math that way, which would mean that the cost would be a higher percentage. So there is some cost, but it's sort of like the real world. If you're doing it by yourself using the internet, your costs are going to be much lower than if you were full service and getting advice from somebody. But I think also one of the learnings that comes out of this, as Christoph was talking about risk, is you do see both the upside and the downside of concentrated positions. And if we think of risk as variance in return, something that can go up 10% in a month also could go down 10% in a day. I printed off, our first sort of half month list of things. No, well, I mean, none of the students' names are actually on here. We have, great names like the Wolf of Walker's Road, Midas Touch, who are currently in first place. They returned 10% last week. But if we look at it, we had one team, and I won't say the name on this, but the first week they're up 6.5%. The past week they're down 10.3%. So most of them are somewhere in between that. You're seeing maybe a 1 or 2% movement in a week, which is a little more conservative. But some people obviously are fully invested to, be up 6.5% in a week and then down 10%. You've got some risk on the table if you're moving like that.
So you made a great point about looking out for countries and make sure you don't have all your eggs in one country basket. We've mentioned a lot of Netflix and Tesla and Apple and so on. The next thing to look about is, are you concentrated too much maybe in one sector, right? Because you have to consider in a portfolio, what is your basis for return and performance? Am I just looking for the tech sector to go up? Well, in all of the positions, you might think you're taking different bets, but it's actually this same flavor, and your portfolio all looks like a tech portfolio. So it's just another thing to think about. But let me ask you, Alice, having seen some of these teams, would you give them some of your money to invest?
I don't know.
Some of the winning teams?
Do you remember what the winning team's return was last year?
I believe it was over 100,000 percentage. Maybe
they doubled their money last year.
Yeah.
Then the answer to that must be yes, then, Susan.
But I think
where can we sign up?
You've had some students, not from last year, but from prior years, who've actually come on and interned at Saxon, haven't you?
Yeah, we have. So
Okay,
we actually hired a few members from the winning team about 3 or 4 years ago who are full-time employees of DMS. Then we've had a few of the winners join us over at Saxon as interns.
And do they come back and speak with the current
Yes, we've had a
registrants
few
and
that have returned and given advice on what worked for them, what didn't work for them with the students.
What advice do you give them with respect to trading unusual investment products, options or futures, or going short, or day trading? Do you give them commentary or advice or thoughts on that?
We usually start with, when we go out and visit a school, or if we do a sort of CyberLink WebEx conference with them, we'll talk about starting slow, along with that, and then branching out with products as they get familiar with them. We ask them to contact us if they have questions about the mechanics of it, and we'll walk them through, this is how you put an options trade on, if they're ready for that. What we're trying not to do at One TradeX is we're just trying to talk about the platform and the mechanics, and we're not trying to generate trade ideas or, be responsible for advisory, because the students are really going to learn from it. But it's really interesting to see some of the groups, because, they may start with knowing what a stock was at the start of the year, but at the end, some of them will have an idea of how the options market and other things worked, and they will have done, days where they've done multiple options trades. And the other thing is, within the platform, they're in class during the day while the market's open, and they don't have access to Wi-Fi, and they can't be looking at their portfolio while it's going on. So they're doing a lot of pre-programming of their trades with limit orders and profit taking, because for them, they're technology natives. Just, it's just another program. And if you show them how to set it up, they get it, I won't say instantly, but after 5 minutes talking to a 15-year-old, they're very comfortable with, this is how I enter and take things, where some of the other clients we've dealt with, it's maybe a little more hand-holding because they're not as used to technology. So the fact that they realize, I can just program this, so if this stock drops from $22 to $20, I'll buy it, and one of my positions, we think it's going to go up. If I see a 10% move from when we've entered, we're going to sell half of it to take profit, or maybe sell all of it at 5%. They get that, because for them it's just pulling levers and mechanics of how to go and program it. So their trades are actually happening while they're sitting in geography class, because they've programmed it into the system. That's
quite an interesting learning experience, as I'm hearing you talking about that. We often say to potential investors, one of the things you need to be thinking about is slightly long term. You need to not be thinking of investments as something you do every minute of every day, but to think about it as a sensible strategy. And but implicitly, because the kids are at school during the day, they are by definition not being able to do day trades. Thoughtful limit orders are not the same as speculative hour or minute by minute trading.
Yeah. No, they can't be in class, on their phone. That's going to get you detention and things. So they aren't watching it during the day. So the process lends itself to securities analysis. And yes, it is 6 months, and the life cycle on their trades may be much shorter, days and weeks rather than months and years. But they are putting it in and saying, Tesla came up, and I'm sure we had teams that were long, and I'm sure that we had at least one team that was short because they knew it was a big name and they knew earnings were coming out. And that's a news event that's going to bring new information to the market and potentially change price, which we saw, late yesterday afternoon that it did.
And so just to clarify there, a limit order meaning that there are two basic type of orders when you make an investment. One is the market order, so where you just go in and buy at the market price. So Facebook now was trading at $182 a share. So if you want to buy some of Facebook, you just go and say, I want a market order. And typically in a liquid stock like Facebook, you'll get your order filled at 182. Or you could say, I want to buy Facebook, but at a lower price. So you can put it in a limit order, which means at a certain price or better. So you could say, I'm willing to buy Facebook at $180 or $170. Now, I think the young people are more familiar with this because before online shopping, we didn't sort of have this, but now you can put in an alert to say when a price drops here, let me know so I can buy it. And so they get that.
I'm looking at you completely puzzled as though that's even possible online, but I'll take your word for it, Christoph. Do you see, maybe just segueing again, do you see many adult groups putting together with investment clubs? Because an investment club is by definition a pooling of investment ideas and ability to research. Are many adult groups doing this? Are these students, as they become older, are they then continuing this tradition? What's your experience?
Can't really speak on this, what the students do after. I'm pretty sure that they continue, carrying the knowledge with them, and pursuing different career paths and studies. But I can speak on behalf of Saxon. We have actually introduced the program into our workplace, and we've had the competition similar. Maybe the grand prize wasn't as large as the Saxon Investment Club, but we also had a grand prize at the end. So that was interesting.
And hopefully within your workplace, you're giving them real money and even better, right?
Yeah.
And it is possible for an investment club to open up a real account with a brokerage firm.
We have a handful of clients that are actually investment clubs where they've set up, and it's a group of people that are forming together to kind of do the traditional investment club, which might be a topic for another day's show, just how those work, I would guess. Because it's a little different than the challenge. Because investment clubs, ones that are successful, you hear stories of them, having 5, 10, 20-year, investment clubs with real people getting pretty good returns.
But it's definitely a good way to collaborate on research ideas, specialize in one sector. I know more about this, you know more about that. Look, I'm afraid, as always on this show, time is our enemy and time is up. We do unfortunately need to end the show. So Alice and Rich, thank you both very much for joining us this morning and educating us a little bit about what the students of Cayman are doing. And we look forward, in March perhaps, to hearing about multiple percentage returns by some of these kids. So thank you very much for joining us.
Thank you.
Thank you.
As a final note then, before we leave, just want to thank again all of our listeners and remind you that today's show will be able to be heard as a podcast on the CFA Society Cayman Islands webpage, and encourage anyone who has a question or topic that they wish us to cover to either email us at moneysense@candw.ky, or, as everyone knows, we are Twitter fanatics here, so post us any comments at Money Sense Radio. We will engage in a conversation with you on there. With that, thank you once again, goodbye, and please do tune into Money Sense again in 2 weeks' time.
Money Sense is brought to you with the support of OneTradeX. OneTradeX, the Cayman Islands' #1 choice for online brokerage.